numbers and narratives. This will be the first video recorded in this channel, and I would like to start by giving you an overview of what our channel brings to you and what value you might get out of it. So for this channel, our main purpose will be to cover the performance of our two main portfolios to see how they do against the benchmark, against the S&P 500. The first one will be the magic formula portfolio, you can see on the screen here, and the second one will be the acquirer's multiple portfolio. And let's just dive in. Let's see how they've done. So now, to make it very clear, I started these two portfolios not too long ago, June 24th, 2022. Not a long time ago. So obviously this is very short-term horizon, and we got a long way to go, because to beat the market, you don't want to beat the market only 1 year and then lost the other 10 years. That means nothing. What it means to beat the market is to beat it consistently, years after years after years. That is how you know that your investment theory is working. That is how you know you are learning how to pick good companies that compound much better than the market. That's how you win against the market. You don't beat the market 1 year and then lost 5 other years in a row and say that you beat the market. That's not how it works. Alright, so with that said, obviously I understand totally that my portfolio was just very early on in this stage, but still, I think it's a good habit to take a look every week to see how they've done. We're not going to make any changes to the portfolio rapidly and hastily without any reasons. So these portfolios likely will stay the same for at least the course of 1 year. And let's take a look at the first one, the magic formula portfolio. Let's see how it's done since inception. So I keep my record here on a Google Sheet, but obviously you can do that in your broker as well. I just like to have my own design and see how they've done. As you can see, all the P&L and all the gains and the loss. And so far, we have put in $4,248. So technically, let's call it, 4,250. And our gain has been 413.5, comparing to the S&P 500 of I believe of 5.97%. Yes, 5.97%. So far this portfolio has been doing quite well. Now I want to repeat again is that our time horizon at the moment is very short. It's just over a month. So by no means am I saying that my portfolio is superior to the S&P 500, or I have cracked the code to beat the market. Not at all. This will be a year by year tracking, and only by then will we know if we have done it right or if we will outperform the market. The second one, the acquirer's multiple portfolio, let's see how it's done. We have put in 4,238 and we have gains $271, translate to a 6.39% gains over the same time period. We just take a look at the S&P 500. They have compounded for 5.97. So both of our portion of this big portfolio has outperformed the S&P 500 so far. I repeat again, so far. And overall, they make up for an 8.04% gain. We have 8,500 capital to start with, and right now we're at $9,183. And to take a look at our closer, this is my broker, TD Ameritrade. You if you have used it, you will probably know that I love this broker. I think they have one of the top-notch customer service, top-notch. But to be very honest, I don't think their UI is very attractive to the eye, very appealing. But I think they do give you a good way of tracking your portfolio. And as you can see over here, I can see my gains total, my gains in dollars, and all my ticker symbol here in alphabetical order. And overall, you can see here, obviously, since we've performed quite well, we have way more winners than losers. We have some 23%, 21%, 18%, 26%, 64%. This is biotech company, I think. Pharmaceutical, yeah. So in that field, because if you have ever invested in like biotech or like pharmaceutical, you will know that they are highly volatile. And if the investment theories work out for them, they will compound really well. But if not, then they'll likely end up in bankruptcy, and you'll probably lose all your money. We definitely have some pretty decent big losers. We have GTX. They are a Swedish company that deal with, I think, they are in the auto services, like they make auto parts for cars and all the vehicles, I believe so. They're down 10% so far in our portfolio. And another big loser for us is Sturm Rugen company, down 10% as well. This one down 12%, TEF. But so far we're performing really well and pretty happy with it. And definitely we'll keep a closer look for sure. And as I said, the inception date for our portfolio is only June 24th. It's not that long ago, not at all. And that is what this channel will bring you. I will keep you updated on these two portfolio performance every weekend to see how we've done. I will also make multiple videos about investment as a general. We'll talk about how to value a company. We'll talk about great investors and what we can learn from them. I would also like to share with you some amazing materials that I have acquired throughout the years of learning investing, and how to value companies, how to value investing the correct way, what is the correct mentality of an investor. And the reason I bring all this up is that I think that these days it's so easy to get lost in the hype and the craziness of the market. Like, you see headlines every single day of people day trading, just people hyping stocks, saying that investing in this company is going to give you like plus 1,000% or something like that. And partly because the media these days are very popular. Everyone can just subscribe to Twitter or some kind of other Yahoo Finance or Stock Market Watch, anything, then can get a bunch of news from there. And sometimes those news will drive you crazy. They just make you lose focus on the long-term goal. Investing is supposed to be boring. Correct investing is boring investing. You don't want to look at your screen every single day. You don't want to look at the candle charts every single day. I can guarantee you that is wrong investing, because that is stressful, time consuming, and unproductive. That is all the thing you want against when you invest. When you invest, you want leisure, you want laziness, you want good companies that will make you money as you go to sleep. Now remember, I think this was Warren Buffett saying, or another financial professional saying, that if you don't let money work for you, then you're gonna end up working for it your whole life. And as an investor, our goal is to make our money work for us. We put our money in good company, we let them compound, and as time goes by, we collect the interest, we collect the gains, right? I mean, let's if you think about it, if you put your money in great companies such as Apple or Microsoft a few years ago, then the returns would have been amazing, and that is totally stress-free. Those are amazing companies with great moats. They will not go away easily, and that is how investing is done in this channel. We will try together to find a solid method to investing, a solid approach that will yield us good returns, and with that return we will compare our performance against the market, see how we've done, what lessons have we learned, and what can we get out of it. Now, before I end this video, I would like to say that these two portfolios, they are not designed by me. As you probably can guess, they're not at all designed by me. The Magic Formula portfolio is a investment method designed by hedge fund billionaire Joel Greenblatt. In his book, The Little Book That Beats the Market, I will mention that in a further video in details about what that book is about and what can we learn from Joel Greenblatt. And the second portfolio, The Acquirer's Multiple, is an investing method designed by Tobias Carlyle. He's an investor from Australia. Great guy, very smart guy. And this investment method is talked about in his book, The Acquirer's Multiple, the same name. So that is how these two portfolios come into existence, is that I read these two authors about the book, and I would like to give it a try, because I think their theory, and they have tested these, it's not like, you know, they are totally in the dark about what they are writing about. They've tested these themselves and they have seen great results, and I would like to try it myself, adopt their investment theory, investment method, to see how it will do over time, at my own risk, of course. This is real money put into real stocks. I could lose it all, I could win it. That is a risk I am more than willing to accept. That is investing. That is investing. And this channel, I also would like to clarify, is definitely will be a financial channel, but there will be no financial advice here. Simply because firstly, I'm not a financial professional, that's for sure. But also, if you are, I just think that as an investor, no one should blindly follow the advice of any other investor, no matter how great the other person is. Please always take what I say with a grain of salt. Do your own research. The reason that I designed these portfolios according to these two authors, because I've read their books like a few times now, not just once. I read their books. I've done research on the companies that will qualify for these portfolios, and I feel decently safe with it. There are some companies that I really wrinkle my brains about, but most of them, when I look at them as like from my own perspective, I feel okay with it. That is why I put my money into it. And so in this channel, instead of me telling you what to do with your money, giving you advice and, you know, pumping stock, hyping stock for you, I will do the exactly opposite. I will show you what I do with my money and show you the result. And then hopefully knowing that can help you have a better decision on what to do with your own money. So instead of me giving you advice, I'm just going to show you what I do with my own personal fund. And then you will decide for yourself if you agree with me on my investment thesis, or there's something that I have overlooked. And please, if you have any feedback on anything, I would love to hear them, and definitely would love to learn from them. And that will be all for this episode this week. I will see you in the next one.